We're jumping straight into Palo Alto Networks today. Everyone is watching the price action, but the real story is the massive platformization bet and the just closed CyberArk deal ahead of earnings.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds on this, and believe me, we are going deep. If you get anything out of this, do us a quick favor.
Yeah.
Hit that subscribe button, give us a like. It genuinely helps get this kind of analysis out to more people who are, trying to figure this all out.
For sure. So, okay, let's set the stage a little, because it's a really interesting setup.
It is.
You've got the stock climbing almost 5% last week, 4.79 to be exact.
Right, it closed around 167 on Friday.
It did, but that's where the context is so important.
Because if you just zoom out a little bit, it's a very different picture.
A much messier picture. The stock is still down, 9% year to date?
And over 17% compared to this time last year. I mean, that's a pretty serious drop for a name like this.
It is, and that's the tension. You have this short-term pop, but it's happening against a backdrop of a really painful slide. The market is treating this, I think, like a capitulation setup.
A lot of sellers are just exhausted.
Completely. And now everyone's just staring down the barrel of this big event.
Fiscal Q2 earnings. It drops this Tuesday, February 17th.
Yeah, everyone is holding their breath. But while that chart looks, let's say, choppy.
That's a kind word for it.
The business itself, the actual engine underneath, is running incredibly hot.
And that's really the perfect way to get into the bull case, isn't it? Because you look at the stock and you see red, but the company's financials, they're a beast.
An absolute beast. This isn't some speculative play. We're talking over $8 billion in revenue.
And $2.5 billion in net income last fiscal year.
Right, but here's the key. Nobody in the market pays for last year's numbers.
It's always about the future.
It's always about the future. And for Palo Alto, that future is all about one word: platformization.
Okay, let's stop there. Because platformization sounds like the kind of corporate jargon that makes my eyes glaze over.
It is. It is a bit of jargon.
What does that actually mean for us? Why should we care?
It's actually a really simple idea for a really complex problem. So for years, if you were in charge of security at a big company, you had to buy dozens of different tools from dozens of vendors.
A firewall from one guy, antivirus from another, cloud security from a third?
Exactly. It's a management nightmare, it's expensive, and frankly, things fall through the cracks because the tools don't talk to each other.
Right.
Platformization is just Palo Alto saying, stop doing that. Just buy everything from us.
So they want to be the single operating system for security.
That's the perfect analogy. It's like the iPhone. You used to carry a phone, a camera, an MP3 player. Apple put it all in one platform. That's the play here.
And we're seeing it in the numbers. This isn't just a theory. Their newer products are exploding.
Right, the growth engines.
You have Prisma SaaS, which is a mouthful.
It is.
That's growing at 36%. But XIM, their AI security platform, is growing at a massive 200%.
That 200% number, that's the one that just jumps off the page. At this scale, in software, that is explosive growth.
It tells you that companies are desperate to consolidate.
They are. They're ripping out that old patchwork of tools and just putting in one unified system.
And that's where the moat comes in. Because once they have you on the platform...
the network effect kicks in.
Yeah.
I mean, they process 1.5 trillion network events every single day.
It's hard to even picture that number.
It is. But here's why it's so important. In AI, data is everything. The more data you feed the machine, the smarter it gets.
So because they see more threats than anyone else, their AI learns faster than anyone else's.
Precisely. They're claiming 99.7% threat detection accuracy. If you're a smaller rival, you just can't compete. You don't have the data.
It's a self-reinforcing cycle. The bigger they get, the better the product gets.
It's a flywheel. And on top of that, you have these massive switching costs. They serve 85% of the Fortune 100.
So once a giant bank installs this system, they're not ripping it out next month for a small discount. It's too embedded.
It would be, operationally, it would be a nightmare. It's like changing the foundation of your house while you're living in it.
Okay, but we have to talk about the elephant in the room. The $25 billion elephant.
The CyberArk acquisition.
Yeah.
It just closed.
It's huge. Why did they do it? What piece does this add to the puzzle?
This is the big strategic catalyst. CyberArk is all about identity security.
So proving you are who you say you are.
Exactly. The old way was a firewall, a wall around the office. But now, with remote work in the cloud, the perimeter isn't a building anymore.
The perimeter is your login, your identity.
Right. And in a zero trust world, that's everything. Palo Alto was strong on the network, strong in the cloud, but they had a gap in identity. This plugs it.
So it's the final piece.
It really feels like it. And the combined company, I mean, they're projecting free cash flow margins over 40% by 2028. It's a cash machine.
Okay, so that bull case is pretty compelling. Fast growth in new tech, a huge data moat, and they just bought the missing piece. It sounds bulletproof.
It does sound good.
But there's always a but. If it's so good, why is the stock down 17% over the last year? What's the bear case here?
And that's the multi-billion-dollar question. Why are investors so hesitant?
What's spooking them?
Well, first is just what you could call a valuation reset. For a while, these stocks were priced for absolute perfection. Now the market wants proof. We saw D.A. Davidson, for example, lower their price target from 240 down to 210.
Which is still higher than where we are now, but it's the direction that matters. It signals caution.
It signals caution, and it leads right into the second, and I think bigger, risk integration.
Merging a $25 billion company has to be a headache.
A massive headache. This isn't a tiny acquisition. You've got different cultures, different tech, different sales teams.
So the fear is they just get distracted by all the internal stuff.
It's worse than that. The fear is that the product becomes a mess, a Frankenstein product.
Yeah.
If the tech doesn't integrate smoothly, that whole unified platform story just falls apart.
And while they're busy with that, the competition is not standing still.
Not at all. We have to talk about CrowdStrike.
The elephant in the room for endpoint security.
Absolutely. They are fighting tooth and nail for every single laptop and server. And there's a lot of positive sentiment around them right now.
So the risk is that while Palo Alto is building this giant platform, CrowdStrike is winning the ground war, device by device.
That's it. You can't be the one-stop shop if customers prefer your rival's product for a key part of the stack. It weakens the whole argument.
And all of this leads back to the immediate pressure point. Next Tuesday, earnings.
The market is skeptical. Plain and simple. If they miss or if they guide lower, because this CyberArk integration is messy.
The stock could get hit hard.
Very hard. The market has zero patience right now.
Okay, so we have the bull case, an empire in the making, on sale, and the bear case, a risky, complex merger in a fiercely competitive market. For someone listening, what do they actually watch for in the next 30 days?
Right, let's get tactical.
Right.
February 17th is the big day, obviously, the earnings report. But you can't just look at the headline revenue number.
What's the key metric then? Where should our eyes go first?
Go straight to the next-gen security ARR, annual recurring revenue, specifically ASI and XIM. That 200% growth for XIM, does it continue?
Or does it slow down dramatically?
If it slows way down, the growth story takes a huge hit. That has to stay strong.
Okay, so new tech growth is number one. What about the CyberArk deal?
Listen very closely to the language on the earnings call.
Yeah.
Are they talking about synergies? More specifically, are they talking about bundling?
Bundling.
If management says they're already bundling CyberArk's tools into their big enterprise contracts, that is a huge bullish signal. It means the cross-sell is working from day one.
That's the proof that the strategy is working. Got it. What about macro stuff like the Fed?
It's always a factor. Just keep in the back of your mind.
Huh.
A company like this, a high-growth platform, does better when interest rates are expected to fall. It helps their valuation.
And quickly, what about precision AI? I feel like every company is an AI company now.
Right. It can't just be a buzzword. We need to see if they announce real product updates in the next few months that actually use it. Show us it's making the product better.
So to recap, circle February 17th, watch Next Gen ARR, and listen for talk about bundling CyberArk.
That's the playbook. Focus on those signals.
All right, let's put a bow on this. The elevator pitch, as I see it, is that Palo Alto is trying to make a huge pivot. They want to go from being a legacy hardware company to being the indispensable AI security platform.
A complete re-rating of the company. And you've got this setup where the stock looks beaten down right as they've added what could be the final piece of the puzzle.
So here's the final thought I want to leave you with. It's about one word: consolidation. In this economy, every CFO is looking to cut costs. They are tired of paying 50 different security vendors. They want one bill, one number to call.
The vendor consolidation trend, it's very real.
Exactly. So the big question to ask yourself is this: is Palo Alto becoming the Microsoft of cybersecurity? You can't fire Microsoft. They're too embedded in everything you do. If Palo Alto pulls this off, they become the one vendor you just can't get rid of. And in a tough economy, that is the safest position to be in.
That's the ultimate goal right there. That's the lowdown. Thanks for listening to the Easy Money Show.
And make sure you're subscribed so you don't miss our breakdown after the numbers drop. We'll see you next time.